Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Brianna Valesky, and we have Michele Schneider on the line. She is Director of Trading Education and Research for Marketgauge. Michele, how you doing this morning?
I'm doing very well. Hi, guys. So nice to be with you today. Thank you. This is my fourth time this year, so I feel extremely honored.
Okay, well, you give us great input, and I kind of wish I'd been following you when last time you were on the show, and you talked about your pick of the year, and that was IGT, International Game Technology, a stock that's kind of been, I guess if you look at the monthlies, kind of an accordion chart over the last couple of years, but it took off yesterday. What was the catalyst?
Well, actually, in terms of the actual news, Dave, this has been a stock that has these blast-offs before with takeover rumors, so I'm not sure if that was the situation yesterday on the fundamental side. But my reason for liking it from a fundamental was more on a broader base. 3D anything is something that I've been very focused on this year. And this is a 3D company. This is what they do, 3D gaming. And so there was a couple of reasons why I was focused on it. One is because of the technicals and this long period of consolidation. Two is because of all of the problems that they had in Macau with some of the typical casino stocks. I thought 3D gaming was a real growth. And I also think 3D in general is a real growth no matter what it is. So this stock I really love. If you go and look at the technicals, and if you go to a weekly chart, you can see that it spent pretty much the entire, after it kind of dipped in 2014, it came back at the end, consolidated between 16 and 18 for months and months and months. So it's unfortunate in the sense that it happened all in one day yesterday. This is one of those buy and hold, which is why I wrote it for 2015. If you were looking to get in now, I would say there's nothing to do. So this was just, one of those buy and holds, which is not typical for me to talk about buy and holds, but I have quite a few that I've gone through the years.
Yeah, I mean, you could. I see it had that sprint up in June of last year, and it kind of continued it, but then it had a long consolidation period. So, could be another consolidation. Do you have an upside target on this, or is this something you're going to hold on to forever?
Well, 20 was the first upside, so obviously you see we got that yesterday. If you go back to this stock in 2013, your high was at, hold on, let me take a look here. It was about 21. So I would say we need to consolidate for a while in order to get some muster. 18 really should hold now. And if we can take out 21, who knows? I mean, like I said, I think the whole future of 3D anything is really big. So that's a good time now maybe to switch to DVD since we're on the 3D topic.
Does that include 3D printing stocks?
Well, I think 3D anything is, to me, it's 3D printing stocks, OnBo, which is 3D biotech. All of these things have been lagging, just like IGT was in 2014. And one of the things that we talked about this year, so many times, has been looking for some of these areas that were totally beat up in 2014 and are basing in 2015, and we can make a case fundamentally as this is going to be a real growth area. And, if you read the news, it's constantly news about 3D printing increasing on every level from, an ear to another type of organ inside the body to buildings. And so more and more companies are actually been investing in 3D printers. The problem with 3D itself, and I know we talked about this the last time I was on the show, is that they have, whereas a lot of companies have been extremely concerned about their bottom line to investors, this is actually taking their money and reinvested. And that's why their earnings haven't really shown tremendous growth. Now, they don't report again, I think, until June. But we're already long 3D printing at around 27. And, very easy stop underneath the low, that would be it. But I'm willing to hold on to this one. And if we can get through 30 to, say, 31, and I think that this thing is going to absolutely explode. So that's another 3D, just like IGT finally did. But, these are things you can't wait for it to happen. There's a few stocks that you can trade in and out very actively, and I heard you talk about a lot of them.
Mm-hmm.
But there's also a few stocks that if you really believe, you have to kind of sit with. So 3D is one. Now, I'm not in Onvo, but let's take a look at Onvo. This is 3D tech company, biotech. It just formed a really interesting V bottom. You can see it's up over 3% here on the pre-market. And this is another one. If you're willing to sit and maybe have a stop under the low, I think there's a future here as well. Now, I don't typically trade $4 stocks, but I would have no problem sitting with this one with, say, a stop under $3, kind of a put away for the grandchildren type stock. So
right, you know how much you can lose, right? If you're buying it at $4 and you have a $3 stop. No, that's a good point. Let's get away from individual issues a little bit here and talk macro. A lot of talk about interest rates going up this year. The jobs number on Friday really caught people by surprise as far as, weak growth. Blame it on the weather or whatnot. They hit the market, bounced right back. Where do you stand? Long consolidation period in the market. Where do you stand on the macros? Interest rates, the market, earnings.
Okay, well, I've been sort of writing every single day, and I've been sort of penning as the modern family because I think that there are a few areas that we really need to watch in terms of not only the macro picture of the overall market, but even where the direction of the U.S. economy is going. So let's start with what I'm calling the grandpa, the granddaddy, IWM. And the reason why I've been so focused on IWM is that last year, while everything else was making new highs in March, April, this couldn't. And I thought that was a real clue to that first correction. You have just the opposite situation here this year, where this is the one that made the new high, while NASDAQ and the spiders and the downs could not. So just focusing on IWM as the granddaddy here, this is the only one of the three that are in a bullish phase. I mean, as we open today, we may see the others slip back over the 50, but they've been hovering between warning and bullish now for a while. There's that trading range that people are talking about. This still has tremendous potential and is far from its 50-day moving average. So we would have to have a pretty significant sell-off. If we don't, and this thing holds up and gets through what I'm not saying is 125.60, which is actually the top of the day when it had that huge sell-off a couple of weeks ago, I would have to say, in the spirit of the fact that this has been one of those markets where people are selling into the rally, I wouldn't care. I still, and I know we talked about this too, on a projection of the fact that this thing has broken out over a year-long consolidation that happened in 2014. And we're basically still over those levels. I have to say, looking at the IWM as a granddaddy, that looks good. Now, with that said, if we go into what I call the other parts of my modern family, I call grandma retail. Okay, now retail has been exploding. As long as retail on a very near-term basis holds 100, I'm talking about XRP, by the way, that also is a good indication because, let's face it, where do you really see whether people are looking at the unemployment numbers, which are often cooked? This is really where I think you see people's spending habits and how much confidence people have in the overall economy in the United States. And you can see here that we're holding and consolidating, and this, too, had a significant breakout this year. If we move on, I've included regional banks as more interesting to me this year than the actual financials. So I heard you talking about Goldman Sachs and JP Morgan, and yes, they're consolidating and they're doing fine. But in terms of future growth, I actually think it stands more in the regional bank area. If you take a look at regional banks right now, they are consolidating here. If they can get through 41.20, this is a huge inverted head and shoulders breakout that I think measures really great. So now let's talk about the more sobering news. Semiconductors are having trouble. They're under the 50-day moving average. They were a huge leader from 2012, 13, into 14. This year they're lagging. If they hold up, that's all they need to do. But if they start falling apart even further, I think that whole chip and tech area that has been a huge boom for the U.S. economy in particular will actually start to put a little bit of a drag on it. And then finally, everybody's talking about biotech and biotech stocks. Biotech, I can call them the big brother. Why? Because biotech has been hugging the 50. This is another one. If it falls apart under that 50, it's going to be very hard for me to stay overly friendly to the market. In general, if it can hang out here, get through, say, 344, get back up around the 350, 360 level, great. Otherwise, I'm seeing right now rallies as probably sell opportunities. And finally, the biggest concern, RYT, which is transportation. Okay?
Oh, yeah. Yep. Let's talk about that.
Yeah, I mean, that is, look at it. It's market's open now, and we're under the 200. This is what is called the distribution phase. The good news is that, it had that peak low a couple of days ago, and it seems to be holding. But if we, with everything else going up, can't recapture back over 155.50, this is what I call the heart of America. I mean, transportation, that's what gets goods moving in this country, railroads and shipping and things like that. We need this. This is really where I see the issues in the U.S. economy. Yes, bottom line shareholders, great. People are working if they're in the right type of companies, like, obviously things like I would say, if my kids were going to school, I'd say get into solar, get into 3D. I wouldn't necessarily say transportation, but yet how could you have an economy moving without that? We're certainly not ready for the Amazon drones just yet. So at this point, to me, this is what you need to watch. Everything else is what I said is a spell out and can go either way. Transportation has to move up, or, going back to good old Dow back in the day, even though the economy was much simpler in terms of what he was looking at, transportation is extremely important. And that's my modern family.
Okay. Do you like that show?
Yes, it's a fun show. I'm not a big network TV watcher, but yeah, it's a great show.
Okay, kind of reminds me of what was that old show that that guy was in?
Married with Children.
Yes, exactly. I know you follow commodities a lot, and crude has made a nice move here, giving some back today. A lot of people were calling for the bottom in oil, $33. One of our guests was talking about. Barron's has been talking about $20. Just, based on the oversupply, you got a little bit of a rebound rally here. Could you give us your short-term and your long-term outlook for crude oil?
Okay, well, you know that I spent many years as a trader on the Mercantile Exchange in New York.
Yes.
And so, I actually, other than the obvious sell-off where everybody was on the bandwagon of the high inventories, at this point, I would not want to be short oil. We were actually long. We took some profits. We're actually long through oil companies right now. I know you were talking a lot about Exxon, and I totally, by the way, agree with you on that 86 number. We are actually long Phillips 66 right now, but going and looking at USO, I actually think that this looks pretty good. This is basing. If we can get through around that 2025 level, not only have we now taken out the 10 and the 50-day moving average, we'll be taking out the 100-day moving average. We have a good base that measures up. But I think you have to look at this one step at a time, of increment by increment. If we hold 1770, we're looking at 20. If we get through 20, we're looking at 22. If we get through 22, we're looking maybe at a move to 26, 27.
Wow.
The only way, for me, the picture would change right now is if I saw some other pattern that shows that this thing was getting ready to sell. I don't see it going lower right here. In fact, all of the commodities that I've been writing about and tweeting about, gold has been trying to base. Look at some of these softs while we're at it. Look at cotton at CT.
Okay.
I've been talking about that thing has exploded over the last 4 days. You'd be a little late to the party right now, but I've been talking about this when cash was trading around 63.40. It's trading at 66.72. Sugar is another one. If you look at sugar here,
got it.
Maybe at SC, maybe it's finally baked out. I mean, this thing has been going down now for so long. people have been trashing the whole idea of sugar. It's poisonous and the other thing. But it doesn't matter. It's still a staple, and it's still a huge aspect in many economies. Grow sugarcane and export sugar. So these are, to me, all of the commodities right now are interesting. You asked me about interest rates. Here's my take on that. Forget about TLTs versus TBTs. Here's a rubber band that I watched snap. Back in the day, the rates were going crazy to control inflation. Now everybody's talked about deflation, and the fact is that the rates have stayed low, and they're worried about raising rates because they're worried about deflation. I actually think the rubber band can go the other way, that the commodities can go up for whatever reasons. It's always hard to know, whether it's drought, whether it's a coup, whether it's, Middle East heating up some more. Let's face it, that's just one breath away from heating up further. I don't even want to get into politics, but the Iranian situation is still very tenuous. Anything can happen is what I'm saying. I've seen sugar go up because of military coups. I've seen gold go up because of rumors, whatever I've seen. It doesn't really matter to me. What matters is if those commodities continue to go up, the Fed will be able to raise the rates, and they'll have to. Otherwise, what will happen is they'll wind up losing control, is what I'm saying. So keep your eye on these commodities right here: gold, sugar, cotton, oil, like you mentioned before. And I wouldn't worry so much about Fed policy right here. It does behoove them to try to keep rates low, but it also behooves them to raise them a little bit, and especially if they see good reason to do it. They are definitely between a rock and a hard place as far as I can see.
Right. That gold, that 1220 level seems to be a real stickler here. Is that what you're looking for it to break out and hold before you, get more bullish in gold?
So they're already long gold. We got a long gold at 112. We've taken a couple of profits already on the way up. I mean, this is a market that no matter what you're in, it's definitely, except for, like I said, those few buy and hold, it's always good to think about taking your profits on the way up. So we're going to hold our position unless it really breaks down under I'm going to say 114.50. 114, that's where I think that last really move exploded from. So if it holds 114, and I'm looking at GLD right now, I think that's a good sign. If obviously we can get back over 116, we're right there right now and hold, that's a better sign. I actually think gold looks pretty good, and I was very bearish in gold for a long time throughout the whole decline. But if you look at the monthly chart, we have this beautiful wedge forming, and that wedge would break out at a little bit higher prices. But I think I see some good solid basing going on here, so I wouldn't discount it. And then take a look at something like Russia, which I've also been writing about. Russia looks great here. It's trading over 19. So what is Russia counting on? Oil, gold. So all of these are interconnected.
Okay, we've been on the line with Michele Schneider. She's Director of Trading Education and Research for Marketgauge. Michele, thanks for coming on. We really enjoyed your input. We'll talk to you again soon.
Thank you so much, guys. I look forward to seeing you all again. Thanks, Brianna. Thanks, Joel.
Okay, thank you.